Good morning. Today is Friday, October the 13th. The time right now is 8:12 in the morning. And overnight, we have quite a bit of movements in markets itself. We have the release of the US CPI numbers last night, and the headline numbers on a year-on-year basis actually came in a little bit stronger than expected. Market expectation was a rise of 3.6%, but it came in at 3.7%. So although it looks marginal, but the reaction was outsized because that caused US Treasury yields to actually surge higher after coming down for the last 48 hours. So that also that also caused the dollar to also surge. Now, what looks like a resurgent equity markets suddenly did a back pedal, and we can see that equity market rallied from most recent low has actually stalled. Now, over in the Dow Jones itself, we can see that the high traded at 33,898 was 48 hours ago. It did not quite register a new high, and the market currently closed at 33,631. So we can see that there was internally a three wave kept by this most recent swing high here as 33,893. So we have a marginal breach here, but on a close basis, it did not quite take out this level. So we will have to see what happens tonight, because today we are into the last day of trading for the week. Market could actually pull back, or you could actually decide that it'd be better off trading higher. But again, the story that we have seen over the since the beginning of September has been rising yield. So the yield story is back again full force because of the CPI number release yesterday. So watch out for further downside. In my opinion, I think the downside is more likely to be the upside. Okay, over in the S&P 500, we also saw market have a marginal high compared to Wednesday's high. High traded is 4,385.85 in the S&P 500. Although it did not close on the high side, it closed on the lower end of the markets. And the market has not fully covered this gap that was left open from last Friday closing to Monday's opening as a result of the Hamas militant surprise attack on Israel on over the weekend. So we do not see a full recovery to cover this gap, which ideally should be covered at 4,401. However, the drop that we saw yesterday could set the stage going forward for a retest of the more recent swing low here at 4,283. So either way, the market may be reacting tonight because this is the last trading day for the week. And over in the Nasdaq itself, Nasdaq actually did a lot better. It did not just have a marginal high, it actually has a high that is the most pronounced relative to the other two equity index. The high traded overnight was 15,333, but it did not close at the very high itself. But that still bring up the possibility of a challenge of the 15,500 levels. So there is still the possibility that Nasdaq 100 may want to go higher to challenge this level before it has any kind of reaction. Again, I do favor the downside more than the upside for now. Okay, over in the Hong Kong market, we can see that Hong Kong market actually pulled back yesterday. This is as of this morning, the market trading at the low of 17,911 in reaction to the losses on Wall Street. However, before that, the market actually edged higher to 18,392, which is previously marked as a possible area of resistance. However, the market missed this bracket of prices just by a touch. I was expecting prices to edge into higher into 18,397 at the least, but the high traded was 18,392, so it missed it by 5 lousy points before it reversed. So Hong Kong market remains basically a seller's market because the market sentiment seems to be pretty poor for now. Technically, it is also doesn't look good. So over in the Nikkei 225, we saw a very robust rally in the Nikkei to 32,660 yesterday, but this morning we see that the price has pulled back and is currently trading at 32,350. By and large, this rally that we see technically do support higher prices going forward. The structure of this rally suggests that there could be a possibility of an eventual challenge of 33,300 levels, which is this bracket of prices. So it does look good for another extended rally, assuming Wall Street managed to hold its gains. Okay. And over in the principal currency, we can see the dollar actually have a major run up last night, basically recovering something like 50% of its most recent low, drop from 107.05 to 105.29. So this is actually pretty sharp, and it does suggest that maybe if nothing else, the market may extend a little bit higher going forward on the back of a rising yield. Okay. And because the dollar has actually recovered so strongly, the other principal currency has all backpedaled. And this did not come as a surprise as far as euro versus the dollar is concerned, because previously I was mentioning 1.0620 to 1.0644 levels suggest that there is a breakout of prices that may actually induce the sellers to come back in, and boy, did they come back in. The high traded 1.0640 and market pullback 50%, in fact more than 50%, nearer to the 61.8% retracement level. Now this could actually offer some kind of support for the market to go even higher. That means to say that if this is the case, the odds of the dollar unraveling technically is still a possibility. So let's see what happens. If the market continues to trade lower and take out the 104.50 levels, then of course this picture will look very, very different in the euro dollars. Same thing happened in the sterling. Sterling managed a high of 123.37 the day before, and the market actually unraveled to trade down almost 50% of its most recent rally. Here we can see that the low here is 120.37, the high is 123.37. Market pulls back more than 50%. This is again very similar to what we are seeing in the euro versus the dollar. There's a chance that the market may do a larger degree three wave targeting 124 to 124.50 levels. So this does look good for a bounce. Okay, and over in the Aussie has one of the worst performance last night. While the dollar only rose 50%, as you can see, both the euro and the sterling also fell by a corresponding 50%. But the fall in the Aussie was a little bit sharper than the rest. It fell almost 90% to a low of 0.6307. Now, the 0.6307 is actually sitting just above this bracket of prices which previously held. The last low last week was 0.6285. So there's a good chance the market may actually go down lower, take out the 0.6285 to go for 0.62. Perhaps even to challenge last year low at 0.6170. However, because this level has proven to have supported prices last week, there's a good chance it may do the same thing again. Basically, what we are seeing is the prices has been trading below between 0.63 to 0.65. So if the market dips into 0.6270 to 0.63 even, that could present a short-term counter trend trading opportunity with a more realistic expectation of a rally back to 0.64. So this could be something that a short-term trader can actually consider. Over in the dollar versus the yen, again, beside the Aussie reaction, we can see that the dollar yen has also recovered very aggressively. The market high so far is 150.16. Overnight high is 149.82, 83. So we can see that there's a possibility the market may challenge this level one more time, with the possibility that it may even go into the 150 half to 152 levels. Again, this is a very, very dangerous level because last time this year, the Japanese authority came in to intervene big time. So do watch out for the risk of intervention as the market goes above 150. Okay, and over the dollar Canadian, because of the strength in the dollar, we also see a 50% recovery in the dollar versus Canadian. Actually, is closer to 0.62%. Okay, 62% is where the market has recovered to. 1.37 even is the high traded so far, but this presents a dilemma. Strong as it may be, but it does look like there's a possibility of a larger degree pullback, even below most recent low here at 1.3570, perhaps even gunning for 1.34 levels. Though there is that possibility, either the market goes surge higher, take out 138.85, or the market do the three-way pullback targeting 134 half. So both scenarios remains a possibility. We have to watch this as it happens. And over in crude oil, you can see crude oil prices managed to bounce a little bit, but it's still very tentative. I am thinking that maybe if the price can go back to $82, that could present a buying opportunity. I'm still very keen to buy at $82. That means that if the market has done the three-way pullback, can stabilize around $80 to $81.50, that possibility of a rebound from here, at least back to $90 is a possibility. Now, precious metals has also rallied overnight to $1,885, and we see gold managed to pull back last night marginally. So this could present a buying opportunity because the rally from here is on the back of that of that Middle East tension between Hamas and Israel. So this is still something in play because I've been reading the news. I've been following very closely. It does looks like the situation has not de-escalated. In fact, it is escalating. So that would underpin precious metals demand. So if the market should somehow drift down to, let's say, $1,850, that could present a buying opportunity at the bare minimum to target the $1,900 per ounce. Okay. Over in the silver, we see the same thing. Market has been kept just above the level which I pinpoint that could actually invite selling interest. The level was $22.11 to $22.21. The market has a marginal high at $22.24. And on a close-to-close basis, this is actually quite true. This level has not been broken on a close-to-close basis. So this could present a dip back into the area of $20 thereabout. However, I do believe the fundamentals supporting precious metal prices may overrule the technical. They may see silver prices continue to escalate to the upside. And Bitcoin has actually reacted negatively to the hotter than expected CPI numbers. Prices has actually pulled back to test the 26,600 levels. So the market right now has a low overnight of 26,564 and is currently rebounding, currently trading at 26,850 thereabout. So again, this level is a great technical buy area for the possibility of a challenge of 29 or at least the mid-range of 28,000. So this is something that you can consider. This is a 2,000 point possibility here. So for those who are interested, this could be a trading opportunity. Now, this is all I have for you for today. I will see you again next week. And in the meantime, you have a great weekend. Bye-bye.